Hey traders, what's going on and welcome to this moving averages trading secrets video. So we're gonna master moving averages and we're gonna cover everything you need to know about them in these simple 5 steps. So let's get right into it. Alright guys, so let's take a look at what a moving average actually is and in which market conditions can it be useful. So firstly, imagine it as a dynamic support and resistance. There is nothing more to it. Alright, so it's an indicator that you can add to your chart, okay, and it's very useful if you use it properly. So note that the moving average is lagging, okay, so you have to identify structure first, okay, and these moving averages are simply used as a confirmation, okay, based on the price action and market structure. That's all it is to it. So as you can see, okay, it can be used in an uptrend, it cannot be used in a consolidation period, and it can be used in a downtrend, okay. So note, in an uptrend, we're simply looking for these higher lows, okay, this green little boxes, okay, and when a moving average potentially crosses one of the higher lows, okay, like this or like this, following the price to the upside, this can be used as a buy confirmation. So in the consolidation, the moving averages will be flat, okay, like this. So there is no trading. We need a higher high or a lower low, so a trending market before taking any trades. In a downtrend is the same thing. The moving average will follow the price, and if this moving average aligns with the lower high, like this, okay, this can be used as a sell confirmation. So let's take a look at how this looks. So if you see, on the left, we have a bullish structure market, okay, and once this, for example, green moving average aligns, okay, with the higher low, okay, this can be used as an entry signal, okay, for example, and we can move forward. So here again, okay, in consolidation, moving averages will be flat like this, so there's no trading. In the downtrend is the same thing in the opposite direction as in an uptrend. So basically, moving average is following the price, and once it aligns right here, okay, for example, or right here, this can be used as our sell confirmation. So that's it, and let's go to the next step. Okay, so now let's take a look at which one to use, EMA or SMA. As you can see right here, EMA is the first one that follows the price, SMA is the second one. So let's take a look at why is that. So exponential moving average, okay, right here you will see it reacts to rapid changes in prices faster, okay. Why? Because only calculated the last number of prices. So basically historic data is not included, it's only average the last whatever number you put in the prices, okay. Conclusion for the EMA, you'll have more opportunities but also more exposure to risk. Let's take a look at SMA, okay, slower response in rapid changes in prices. This reflects right here because it's the lower one and basically it's following the price but not so rapidly as the EMA. Why? Because historic prices are included in the average, okay. It's not only calculating the last number whatever you put in, okay, but also the historic data. So this means it's more steady, less emotional, if you can say that, okay. So conclusion, okay, you'll have less trades but potentially better percentage, okay, because when it will come to SMA, okay, it will have a much higher percentage of, playing out. So let's take a look at one example of the SMA trade, so you just have a better, idea of how this works. So here we have a higher high and we're looking for the next higher low, okay, and where this higher low is going to end potentially, it could be determined by a moving average. So let's take a look. So right here, also this is combined with the previous, okay, resistance right here, which is a new support right here, and we have this dynamic support with this EMA. So this could be a good trade by itself, simply by following market structure, higher low, moving average, and support and resistance. So let's take a look, okay, and this bounced right here. So this is an idea of how you could take a trade on a moving average. So let's take a look at the next step. Okay, now let's take a look at the timeframes and numbers. Personally, I only use 4-hour, daily, and the weekly timeframes. In terms of the numbers, I use 50, 100, and 200 moving average. So I would also say that the 50 is used only on the daily and on the weekly timeframes, okay, because it's the weakest one. So 200 and 100 are basically the strongest and the ones that have the most probability, okay. So two things to keep in mind. Higher time frames, okay, higher probability but less trades, okay, vice versa for the lower time frames. If you're going to use time frames, for example, on the 15 minute, on the 30 minute, you'll have more trade opportunities, but the confirmation is going to be much weaker, and of course your win-loss percentage is going to drop. So secondly, the higher the moving average or the SMA, okay, whatever you're using, the number, the higher probability trade, but the same goes, you'll have less trades. So 200, you'll have less trades than the 50, but you'll have higher percentage and better probability, okay? And vice versa goes for lower time frames. Alright, so now it's the time to apply our moving averages to this chart. So what you want to do is you want to go to indicators, okay? And firstly, let me note that I will firstly add the smoothed moving average, and then we're going to do the same for exponential. So for the smoothed, go to smoothed, okay? Click on it. It will appear on the left corner, okay? Right here. Go to settings. You can of course select the length, okay? We can do 50, 100, 200, whatever you feel, okay? So let's do 50 for this one, okay? And here we have the indicator time frame. So you can select this, however you like, okay? As I said, I personally don't, use moving averages below H4, so let's do H4. Okay, you can go to style and also select the colors to whatever you like, okay? If you want to do 50, 100 and 200 for the 4-hour time frame, for example, what you want to do is go to here, okay, and click on this tool, so 3 dots. Click on copy and just paste it 2 times, okay? Now go to the second one and just click on 100 right here, and to the third one and click 200. So what do we have here? We simply have the 50, okay, 100 and the 200 smoothed moving averages on the 4-hour time frame on our chart. Of course, you want to select a different color for each one, whatever you feel. Okay, I'm gonna do a random one for this video, and maybe here. Okay, so we have different colors for different SMAs. Alright, so now let's hide this and let's apply our exponential moving average. Okay, I'm gonna show you the indicator that I use. Go to indicators and just paste this right here. Okay, so maybe this will work. Let me see. Okay, so this name right here, and you can add this indicator. Okay, I like this one. Why? Okay, let's go to settings and let's remove the 4, 1, 2 and 3. So I only need the first 3. Okay, this is the EMAs. Okay, the colors completely up to you. Let's go first one black, second one blue, and the third one red. Okay, so inputs, okay, this is the daily. So let's do the 4-hour. You want to select the 4-hour time frame. Okay, and let's input the numbers. So because I only triggered 1 second and third, so this is going to be 1 second and third. So EMA 1 50, EMA 2 100, okay, and EMA 3 200. So now I have the same thing, okay, just an exponential moving average on the 4-hour time frame. So if you want to add a daily moving average, for example, you can just go to settings, okay, and click on the daily. Now you have the daily ones, 50, 100 and 200 exponential, or the weekly, the same thing. Okay, also let me show you the last trick. If you want both of them at the same time, you can just copy, paste. Okay, so now you have the 4-hour moving average right here. If you want the daily, go to the second one and click on the daily. So now you have the daily and the 4-hour. Of course, you can toggle off, any of this which you like, so your charts are not messy. Okay, and if you want the weekly one, just for example, settings, okay, and click on the week. So now if you look at this chart, okay, you will basically have all these moving average at the same time, at the same moment. And what you can do, you can look for potential areas where these moving averages align at the same moment. So if you can see right here, okay, what does this mean? If potentially price comes to this level, this is going to be a strong confluence, which could potentially spark the next trend to the upside, because we have a lot of moving averages on different time frames on this area. So this is it for this section, and let's continue. Okay, so now is the time that we apply what we've learned and look at a few trade examples. Okay, firstly, what we can see here on this chart, we have a trending market to the upside. Okay, so naturally, we're going to be looking at the higher lows, okay, with confluence, okay, in this time moving averages that we could potentially, move to the upside. So note that moving averages always needs to align with other confluences on the charts, such as trend lines, fibs, support and resistance. Okay, I'm gonna show you some trades with moving averages, but of course I'm gonna also paint the picture with other confluences. Okay, so firstly, let's start here. Okay, we bounced from a strong level 125 right here. Okay, from this level we made a high, higher low, higher high, and this could be our next higher low. So if I apply 4-hour moving averages, okay, it's nothing there. Let's apply the daily. Okay, and as you can see, the daily moving average aligns with this on the chart. So this could potentially be your pullback trade right here. So one trade, of course, keep in mind this is only potential. Price then came to the upside, made a higher high, another higher low. It stopped where? On the 204-hour moving average. Okay, so this could potentially be your next trade. Okay, right here, stop loss could go below structure or whatever you like, below the moving average. It's not, it doesn't really matter for this video. Okay, for this trade and for this trade, what you can also do is simply connect a trend line from the low to the high. So you have 1, 2nd, 3rd, and 4th bounce for this trade right here. Okay, and you also have the fib from the low to the high. If I just do the fib, okay, you'll see around the 61.8. So 3 confluences for this position. If we move forward, okay, higher low, so higher high, higher low. Okay, maybe the 50 moving average on the 4-hour is there. Let's take a look, and it is. Okay, this could be your next trade right here. Okay, price goes up, goes down, another trade on the moving average. Okay, here you would lose this trade potentially if you're gonna be entering on the 50 moving average. Okay, price makes a higher high, higher low again, so no trades here. Or you could even take a trade in between, but it could be a losing trade. Okay, doesn't really matter. So continue, price is this consolidation period, but then decides to bounce from this level. Okay, and this is also a 204-hour moving average. Price then makes a higher high, higher low. Okay, this could be another trade on this 50 moving average, for example. Okay, stop loss below structure, targets above. Okay, and you also have this 131 key level right here. This could be a confluence for your trade and also a fib. Let's take a look from the low to the high. We have the 50 Fibonacci. So moving average, 50 fib, okay, and the key level. Let's continue. We have few trades, and now let's take a reversal trade. So basically right here, okay, this was an uptrend until this moment. So basically price is making higher highs. Okay, broke 1-hour structure, but 4-hour structure is right here. Okay, 4-hour structure is broken, okay, right at this moment. So this is our next lower low. Okay, broken the previous higher low on the 4-hour time frame. And what we can do here, once this lower low was formed, okay, we can look for moving averages. Okay, and as you can see here, okay, we have the 100 and the 200 on the 4-hour time frame aligning, okay, at the same point. Okay, and this is a strong confluence for this trade. Okay, also if I connect the fib from the high to the low, okay, we have nothing there. Let's connect the highest point, 61.8%, okay, Fibonacci, so which is a confluence for our position. So this one, and we also have 132.5 key level, okay, which was also respected in the past, 0.50, okay, around here. So we have 3 confluences, but the initial idea was basically buy this moving averages right here. Okay, so break and retest of the moving averages. So beautiful trade. Potentially you can take this trade right here. Stop loss could go, whatever, doesn't really matter. Target below. Okay, if we take a look at another example, price pushed to the downside, came back up, and another time it stopped on the moving averages right here. So this is potentially taking 2 trades simply by looking at moving averages, of course combining other confluences along the way. For this setup, let's take a look. High to low, okay, fib, we have the 78.6 fib also aligning. Okay, and then price continues pushing to the upside, okay, and so on and so forth. And this is the moment that we're currently in. If I take a look at this chart, okay, what I would look to do in this current time, this is 14th of October, I could apply the daily moving averages and the weekly ones, and I would simply look, okay, let's take a look, let's remove, look for a pullback, okay, around this area where these moving averages align to go further to the upside. So hopefully you enjoyed this video, and we'll see you in the next one. Cheers, guys.